Time for business. The Central Bank of Kenya has lowered the rate by 25 basis points to 9.25%. Its lowest level since January 2023, marking an unprecedented 8th consecutive cut since February 2024, when the benchmark stood at 13%. The regulator argues that the move will augment the previous policy actions aimed at stimulating lending by banks to the private sector and supporting economic activity, while ensuring inflationary expectations remain firmly anchored. Here's Jimmy Mbogo with that report.
Central Bank is expected to move the needle in unlocking credit to the private sector, which has remained low as financial institutions opt for less risky investments. The cuts now bringing the cumulative reduction in CBR to 375 basis points, representing the longest monetary easing streak in the country. According to the CBK Governor Dr. Kamau Thuge, the decision reflects continued easing to stimulate lending and sustain economic recovery.
The whole idea of lowering the CBR was to stimulate credit to the private sector, which in turn stimulates economic growth, which in turn improves the labor market in terms of improving on employment.
The CBK has also announced plans to hold further talks with the International Monetary Fund IMF to discuss a new funding package. According to the governor, the talks will take place in Washington during the spring meeting set to be held next week.
But then, just to emphasize, it's our expectation of to get a funded program. And of course, we would hope to reach agreement on a funded program as soon as possible.
To ensure that commercial banks implement the new risk-based pricing model, the central bank governor noted that a technical committee is overseeing the implementation process and reviewing models submitted by the lenders to ensure they comply with the CBK guidelines.
We do have one bank that has already submitted to us, but again, as I said, we are expecting we have given the banks the 3 months for the new loans and 6 months for the existing loans.
Jimmy Mbogo, Citizen TV,